Let's talk Baidu. Big surge recently. The question is it just temporary height? Or, is this AI giant finally getting the valuation it deserves? Because it really looks like they're on a full AI offensive now, and, well, the market's definitely paying attention. Welcome to D-Risk, the podcast where we give you that no-nonsense stock analysis. Today we're doing a deep dive on Baidu, ticker BIDU, all based on our research from this morning, September 17th, 2025, just before 9 a.m. Eastern. But first, you can't really ignore the bigger picture, right? The market mood today, it's kind of jittery out there. Pre-market futures are basically flat, Dow's up a tiny bit, Nasdaq's down. Plus, there's talk of U.S. economic growth slowing down, so investors are being cautious. And the big thing everyone's watching is the Fed decision later today. Creates a lot of tension, yeah. Kind of a wait-and-see game.
Absolutely. And that tricky backdrop, it's not just noise. It really affects how news, even good news like Baidu's, lands. It means even something really compelling from a company has to deal with a market that's just holding its breath for the Fed.
Right. Makes sense. But despite that macro picture, Baidu's own story has been pretty loud lately. So let's get into the fundamentals driving this thing. Baidu's been on an absolute tear. Mostly AI optimism fueling it. They just rolled out their new reasoning model, Ernie X 1.1. It's a more advanced AI, right? Better at understanding, generating text, solving tricky problems.
Making the AI smarter, basically.
Exactly. And they also announced a major strategic partnership. Plus, and this seems really key, they're doubling down on making their own AI chips in-house.
Which is a smart way to try and sidestep those U.S. export restrictions. Shows they're serious about being self-sufficient.
Definitely. And all this good news even got O'Reilly Research to upgrade the stock. They went from sell all the way to buy.
That's a pretty big shift in sentiment from an analyst firm.
Yeah. And Baidu also just did a debt offering, presumably to, fund these AI ambitions.
And what's really interesting here, I think, is the potential undervaluation. The stock's trading around $124 now, but our fair value models, looking at cash flow, earnings, they suggest it could be worth closer to maybe $158 to $163.
Wow, okay. So quite a potential gap there.
There is, and Wall Street seems to largely agree. Over 63% of analysts have it as a buy or strong buy, which brings up a really important question, doesn't it? You've got these aggressive, positive moves from Baidu, but they're happening against this backdrop of a cooling global economy, maybe some geopolitical friction still simmering. How does that balance out?
That's the million-dollar question, isn't it? Fundamentals look great, but the external stuff is always a factor. So thinking about all that, what's the sentiment? How's the market actually feeling about Baidu? Is the crowd buying this story?
Well, if you look at the options market, it is practically screaming optimism. Very few skeptics seem left. The put-call ratio is way down at 0.28. That means traders are buying almost 4 calls bets on the price going up for every single put, which bets on it going down.
4 to 1, that's pretty bullish.
Extremely bullish. Shows real conviction that this upward move has legs. You can see where the action is. Tons of calls bought at the $100 strike. And on the put side, lots of activity around the $80 strike, acting like a big support floor.
Okay, so clear battle lines drawn by the options traders. And what about the short sellers? The bears?
The bears seem to be hibernating on this one. Short interest is tiny, just 2.53% of the float. Basically, almost nobody is actively betting against Baidu right now. The positive sentiment is overwhelming.
Got it. Okay, sentiment's clearly positive. Let's turn to the charts then. The technical story. What's the price action telling us?
Well, the trend looks powerful, a big breakout higher after months of going sideways. We even got a fresh long-term buy signal flashing.
And you're seeing real money follow, right? Volume confirms it.
Yeah, volume showing significant accumulation. And the price is holding nicely above the VWAP, the volume-weighted average price. That usually tells you the big institutions are supporting the price, buying above where the average share traded. Strong backing.
Okay, so trend and volume look good. What about momentum? Momentum's accelerating too, picking up steam. And here's the caution flag. Yeah. One key momentum indicator just shot up into overbought territory.
Okay. The classic warning sign.
Exactly. It doesn't mean the rally's over, but it often signals things have moved maybe too far too fast in the short term. Could be due for a pullback, a breather, as early buyers lock in profits.
Tests the strength of the move.
Right. And volatility also rising. The trading range is expanding. That confirms the strength, but also means, bigger potential swings up or down.
Okay, so let's try and pull all this together. Our strategic outlook, where do we land? Based on everything, our final analysis is a cautiously bullish outlook.
Cautiously bullish.
Yeah.
Okay, why the caution?
Primarily because of that extremely overbought momentum reading, makes it vulnerable to a quick snapback, and of course the macro elephant in the room, that Fed decision later today. If the Fed comes out more aggressive, more hawkish than expected, that could definitely put a damper on this rally.
But still bullish overall.
Still bullish, yes, because the fundamental story just seems too strong to ignore right now. The AI progress, the in-house chips, that analyst upgrade, those are potential game changers. And that's backed up by this super positive sentiment and the strong technical breakout. It suggests this is more than just a one-day pop.
So the caution is just acknowledging it might need to pause or pull back a bit. Trees don't grow straight to the sky overnight.
Precisely. Healthy rallies often consolidate. So for the next few sessions, keep an eye on key levels. Bulls really need to defend $125 to keep the immediate momentum going. If they do, the next target looks like $135.
And if they don't hold $125?
If $125 breaks, that opens the door for the bears to push it back towards support around $123.79. And that level, $123.79, that's our invalidation point. If Baidu closes below there, it would pretty much negate this immediate breakout, suggesting the upward thrust has failed for now.
Okay, it makes sense. So it really seems like Baidu's artificial intelligence is creating some very real intelligence for investor portfolios right now. The momentum is definitely there, hard to deny. But in a tense market like this, watching those levels, $125, $123.79 is absolutely crucial. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.